The headlines are loud, but the real money? It's quietly moving into sectors that most people aren't even aware of. Hey everyone, Mayor here, filling in for today's video, and trust me, this is one you'll want to stick around for. We're talking about some of the best tech stocks to buy right now. I'll show you exactly where the hidden upside is. These are the stocks that could turn today's market chaos into tomorrow's generational wealth. If you're serious about investing through uncertain times, hit that like button to help this video get 500 likes, share, and subscribe for the latest market breakdown. Thank you. And just a quick note, this isn't financial advice. It's smart, strategic research meant to inform and educate. In our recent videos, we highlighted SoFi Technologies as a compelling fintech growth story. Since then, the stock has remained relatively stable due to various economic and geopolitical factors, but it is now gathering even more momentum, riding a fresh wave of enthusiasm thanks to its crypto comeback and aggressive global expansion. With SoFi now doubling down on blockchain-based innovation and expanding its full-stack offerings, it's time we take a closer, deeper look at what could be one of the most disruptive financial plays on the market today. The company combines lending, investing, credit, insurance, and more into a smooth, mobile-first experience. Recent moves, including a bold return to crypto investing, blockchain-based cross-border payments, and new high-yield digital accounts, show that SoFi isn't just innovating for innovation's sake. It's strategically changing how finance is accessed, delivered, and scaled. How is crypto comeback fueling a new growth phase? SoFi's stock rises over 2% after launching crypto-enabled features, including plans to resume trading top coins like Bitcoin and Ethereum, along with new services such as staking, stablecoin access, and crypto-backed loans. The timing is ideal. With nearly 30% of U.S. adults now holding crypto, SoFi is tapping into the growing demand for trusted, regulated platforms that connect traditional and digital finance. The real advantage? These capabilities are supported by SoFi's national bank charter, which provides it with a rare level of regulatory clarity. With interpretive letters 1183 and 1184 from the OCC providing approval for digital asset custody and stablecoin reserves, SoFi is among the few fintechs operating with full federal banking compliance in the crypto industry. SoFi is quietly transforming into the infrastructure layer for digital banking, allowing other brands to provide white-labeled financial services. Think of it as AWS, but for fintech. This embedded finance model is not only sticky but also scalable, generating a strong B2B revenue stream that diversifies SoFi's income far beyond consumer lending. SoFi Technologies made significant progress last quarter, with a notable 32% price increase, primarily driven by its expansion into digital financial services through the integration of crypto-based features and blockchain innovations. This move likely boosted investor confidence, positioning the company as a modern provider of financial services. Although the broader market rose 1.7% last week and 12% over the past year, SoFi's strong growth outpaced these averages. Additionally, the partnership with Benzinga to enhance market insights may have increased investor optimism, supporting the company's broader strategic efforts in digital services and investments. This strategic move may enhance SoFi's revenue from its capital-light loan platform and SoFi Money, contributing to projected growth. Analysts forecast revenue to increase to $4.4 billion and earnings to $912.2 million by 2028, indicating a robust outlook, although economic uncertainties and market volatility remain potential obstacles. In a broader context, SoFi's share performance over the past 3 years, with a total return of 180.25%, shows strong long-term investor confidence. This return significantly outpaced both the U.S. market's 12% and the consumer finance industry's 34.7% returns over the past year, highlighting SoFi's impressive growth path and competitive advantage. Despite a recent stock price of $16.27, which is slightly above the consensus price target of $14.45, the company's rapid growth indicates a closer alignment with analyst expectations for future profitability. The potential influence of new partnerships, such as with Benzinga and ESPN, along with ongoing improvements in SoFi's financial products, will be essential in maintaining and surpassing these forecasts. As SoFi continues to expand its product lineup and strengthen its market position, its ability to meet and exceed revenue and earnings projections will be crucial to its success. SoFi trades at a premium multiple of 41x forward earnings, and for good reason. It's a tech-first platform targeting Gen Z and millennials, the most valuable consumer group today. However, keep in mind that no stock or investment is without risk. SoFi investors should consider the following: valuation premium, regulatory overhang, particularly in areas such as student lending and cryptocurrency. Execution risk. Expanding across multiple verticals could put pressure on margins. Still, the fundamentals stay strong. In the long run, those fundamentals are more important than daily noise. SoFi Technologies isn't just participating in fintech, it's shaping what the next decade of finance will look like. With its growing crypto options, B2B embedded finance platform, AI integration, and highly engaged user base, SoFi is a rare example of a fintech that can both scale and remain resilient. While short-term volatility may create hesitation, long-term investors should view current levels as a strategic entry point for their investments. Because when the macro winds calm and innovation regains center stage, SoFi may not just recover, it may lead. If you're looking to invest in the next great financial ecosystem, SoFi might be your moonshot. Would you buy SoFi stocks at this price level or wait for a better entry? Please let us know in the comments, and we will proceed to the following stock. Palantir Technologies. PLTR has returned 1,900% since early 2023, but our analysts believe the stocks are overvalued as of today, 27th June 2025. Palantir trades at such a rich valuation that its share price could decline 66%, and it would still be the most expensive stock in the S&P 500. In our previous videos, we highlighted this company as a rising star in the defense AI space. Since then, the stock has surged to new record highs, gaining fresh momentum from its nuclear AI deal, geopolitical catalysts, and renewed investor enthusiasm for security-focused tech stocks. With developments moving quickly, it's time to take a closer look at what's driving PLTR and whether it's still a smart buy or sell. But first, why is the spotlight back on Palantir? Palantir's value proposition has never been more straightforward. With tensions rising in the Middle East and global security concerns making headlines, Palantir's battlefield-tested software remains at the forefront. When Israeli airstrikes targeted Iranian facilities on June 13th, Palantir's shares increased by more than 5%, a sign of how closely this company is linked to national defense priorities. But is this surge purely reactionary, or is something bigger at play? Not just a war trade, a structural growth story, Palantir has built a dual-engine business around its two core platforms: Gotham, the preferred tool for U.S. military and intelligence agencies used for pattern detection, real-time decision-making, and mission-critical insights; Foundry, a commercial data integration system used by enterprises to harness the full power of their operations. Now, both are being enhanced by AIP, artificial intelligence platform, Palantir's machine learning operating layer, which enables the secure and scalable deployment of AI across various industries. This combination of essential software and AI innovation is the reason investors are reassessing PLTR's long-term potential. Unlike many tech companies rushing into AI, Palantir's solutions are already in use. Its recent partnership with the nuclear company is a perfect example. They're developing NOS, the first real-time AI-powered platform for building next-generation nuclear power plants. This partnership does three things: anchors Palantir in the booming energy infrastructure AI market, deepens its role in U.S. industrial policy and national strategy, proves that Palantir's AI isn't theoretical, it's operational and revenue-generating. While government contracts keep the lights on, Palantir's breakout potential lies in commercial adoption. If Palantir can continue turning its AI leadership into enterprise deals, the upside could be explosive. The forward PE and sales multiples are significantly higher than those of its aggressive software peers, such as Snowflake and CrowdStrike. At these levels, the market is expecting near-perfect execution and ongoing geopolitical tailwinds. However, if it delivers, the current price may prove to be cheap in hindsight. Let's talk about the risks. First, sky-high valuation. Any revenue or margin miss could trigger sharp pullbacks. Government dependence. Geopolitical premium. A peace dividend could depress the stock. AI skepticism. Can AIP live up to its buzz? Comment below. Here is a technical level to watch for support at $97 and resistance at $147.78. Traders may look for pullbacks near support, while long-term investors should monitor quarterly earnings and trends related to AIP adoption. Palantir stands at the intersection of AI innovation and global defense strategy. Few companies have a stickier product or a more ingrained presence within the U.S. national security complex. The latest nuclear AI deal shows Palantir isn't just hype, it's building the foundation for tomorrow's essential systems. Meanwhile, the broader market rally, AI momentum, and expectations of Fed rate cuts continue to support tech valuations. Please be advised that caution is necessary. With PLTR up over 90% this year and trading at sky-high multiples, investors need conviction, not just curiosity. If you believe in the rise of AI, the importance of defense tech, and the long-term shift to intelligent infrastructure, Palantir deserves a place on your radar, if not in your portfolio. Would you hold at these levels or wait for a pullback? Could you share your thoughts in the comments? Next is AeroVironment. The stock skyrockets on Q4 beat. Is this defense tech darling just getting started? AeroVironment, Inc. AVAV, a leading provider of tactical unmanned systems and precision strike technologies, has experienced one of the market's most impressive short-term rallies. Trading at $270.27, the stock has more than doubled in the past 3 months, rising over 112%, including a sharp 21.6% jump on June 25th after its strong Q4 earnings report. This performance highlights the intensifying global demand for next-generation defense solutions, particularly AeroVironment's loitering munition systems, LMS, such as the widely deployed Switchblade drones. As modern warfare continues to evolve, real-time intelligence and precision-targeted strikes are becoming indispensable, and AeroVironment is positioning itself as the contractor of choice in this high-stakes arena. Earnings signal momentum, despite one-time charges. For the fourth quarter of fiscal 2025, AeroVironment reported a net income of $16.66 million, more than double the $6.05 million it posted in the same period last year. Revenue increased 40% year-over-year to $275 million, primarily driven by a $77.6 million rise in product sales. However, the full-year picture is more nuanced. Net income dropped 27% to $43.6 million, mainly due to a non-cash UGV goodwill impairment charge of $18.4 million. Still, with full-year revenue rising 14.5% to a record $820.6 million, AeroVironment stays firmly on a growth path. International diversification is gaining ground. Ukraine remains a key revenue source, accounting for 18% of fiscal year 25 revenue and 12% in Q4. However, management expects this to decline below 5% in fiscal 2026 as AeroVironment shifts toward a more diverse customer base. In fact, over 50% of the company's revenue now comes from international markets, with non-Ukrainian European countries making up more than 24%. In fiscal year 2025, international orders for the company's Switchblade drones reached nearly $250 million, while Q4 orders for the Jump 20 system amounted to almost $100 million, with more than half coming from overseas buyers. Segment highlights and product strength. AeroVironment's LMS segment was the highlight of the quarter, generating $138.3 million in Q4 revenue. 80% of which came from the Switchblade 600 platform. The uncrewed systems segment also performed well, posting $112.6 million, representing a 9% year-over-year increase. The Puma drone remained a significant revenue contributor, accounting for over half of UXS sales. The company concluded the year with a funded backlog of $726 million, an 82% increase from last year, along with $1.2 billion in bookings, providing investors with clear visibility into future revenue streams. Strategic growth through Blue Halo acquisition. In a bold strategic move, AeroVironment acquired Blue Halo, a defense tech company specializing in space, cyber, and directed energy. The deal positions AeroVironment as a comprehensive defense provider across all domains: air, land, sea, space, and cyber, at a time when geopolitical risks and technology convergence are reshaping global defense priorities. Management's bullish outlook for fiscal year 2026. Looking ahead, the company predicts revenue between $1.9 billion and $2 billion for fiscal 2026, more than double the previous year's revenue. Management credits this to increasing global demand, expanded production capacity, and the ongoing deployment of 3 new advanced systems introduced in fiscal year 2025. The company's substantial investment in R&D is paying off, expanding its tactical portfolio and strengthening its brand as a forward-looking innovator in defense technologies. Investor. Takeaway: room to run or already priced in. Wall Street analysts have given AVAV a consensus rating of strong buy. However, the recent rally has pushed the stock above most analyst price targets, including the highest on the street. This suggests that a substantial portion of the company's near-term upside may already be reflected in the current valuation. However, in a setting where geopolitical uncertainty and military modernization are prominent, AeroVironment remains one of the few dedicated unmanned systems providers with a global presence and increasing backlog. For long-term investors interested in the future of defense, AVAV is a stock to watch, preferably during a pullback. These aren't merely stocks, they're strategic investments in disruption, innovation, and resilience. If you're dedicated to staying ahead of the market, not just riding waves but spotting where the tide is turning, then hit that like button, share, subscribe for more insightful investment opportunities, and leave a comment. Which of these stocks do you believe has the best investment opportunity in 2025? Let us know in the comments section below.